Welcome to Turning Hard Times to Good Times. I'm your host, Jay Taylor. Really pleased to speak to you today from New York City on the 24th day of August, 2021. I do want to thank all of you for listening to the show, making it one of the more popular shows on the Voice America Business Channel. I encourage you to send along whatever comments you might have about our show. Send them to questionsfortaylor@gmail.com. We do want to thank our sponsors for today's show. They are Novo Resources, El Oro Resources, Hannon Metals, Labrador Gold Corp, Lion One Metals, SK Mining Corp, NV Gold Corp, and Firefox Gold. Michael Oliver is not with us today, but given the action in the gold markets, I believe it makes sense to just pass along a couple of his remarks that he made this past Sunday, August 22nd. He said regarding his 10-day average, Michael said the following, and I quote, "Bears have had a few days to beat gold down from that short-term resistance, but instead all they achieved was a stall. Give them Monday to do something. Otherwise, assume that gold is likely to move on through that 10-day momentum decline. A $1,786 close on Monday will clear that line and take out most recent prior highs on that line that occurred in late July. That would not be a major event, but a sign that the rapid rebound from the ridiculous, massive gold dumping from Sunday night, August 8th, was perhaps their last barrage. It backfired on them." End of quote. And then regarding weekly momentum, Michael was looking for a close above 1818 this week. And regarding a quarterly close, he's looking for a close above 1865. That is the quarter that ends in about 5 weeks from now. And he notes that going into the next quarter, that is the final quarter of this year, the hurdle that gold needs to get over would be 1825. So that would be in the fourth quarter of this year. In other words, the hurdles keep falling as the momentum levels decline. So we'll keep an eye on it. Right now, I looked a little bit ago, gold was selling at about 1806, so it certainly has cleared that first hurdle on Monday. So we'll have Michael on next week to get his uptake then. And we'll hear what he has to say. Who knows what happens between now and next Tuesday. I've titled today's show, Preparing for Accelerating Price Inflation. Lynn Alden and Dr. Quentin Henning return, and Chen Lin will be with me momentarily as well. Lynn will explain why rates of inflation may be transitory, but why price levels are likely to continue to rise, and possibly dramatically so. Her outlook for oil and gas is very bullish because she doesn't believe alternative sources of energy can come on stream nearly as rapidly as assumed by many investors. She also favors alternative forms of money like gold and silver and remains open to owning Bitcoin as well as other cryptocurrencies. So we'll get her take on those topics as well in the second half of today's show. It's certainly one way to protect your wealth, and Lynn certainly is an advocate of that, is gold. And another way is owning companies that are finding very profitable high-grade gold deposits and silver deposits in the ground. So we'll be talking to Quentin Henning after our first commercial break. He's going to give us an update on SK Mining's VMS project. That's a gold and silver-rich VMS project, very much akin to the SK Creek gold deposit, which is one of the richest precious metals deposits in Canadian mining history. Well, SK Mining believes they have a good shot at finding at least another one of those on their very large-scale project just south of the SK Creek gold mine in British Columbia. So that Quentin will be with us in the second segment of today, but right now I'm really happy to tell you that my good friend Chen Lin is with me. Thanks for joining me again, Chen.
Thank you, Jay. Glad to be here.
Yeah, I'm really glad to have you here because you've your track record has been really very remarkable in terms of timing and finding biotech stocks. They're very volatile, these things, and people get way overpriced and then they crash, and you've been able to pick up the pieces when these things have crashed at times and made a lot of money for yourself and for your subscribers. And the one that you just told me about, and one that I'm adding to my own newsletter, is Tresita Inc. Trades only about 50 million shares outstanding, Chen, I think, and at a $4 price today, that's where I saw it a little earlier today, it gives it a market cap of only $200 million, which is pretty small compared to a lot of its peers. And the company is in phase 3 testing of a drug that appears to show some real efficacy with regard to slowing down kidney disease. And here's a stock, though, that was trading, Chen, late in 2019 at $44. It's now trading at $4. I'd like you to tell me something. Why do you think, what's going on with this company? Tell the story to our listeners, and why do you think nobody really wants the stock now when just a short time ago it was selling at 10 times this price?
Yes, hi. Thanks, Jay. I love sell-offs, either in biotech, in gold, or in energy, in any space. I like to buy bargains, right? This stock down more than 90% from peak to trough. Last year, I was buying Amers that was down more than 80%.
Yes, I remember.
Then recently, I feel biotech has bottomed. I was buying 80%, another stock down 80% today. I'm buying another one down 80%. So all these are sold off violently. One of the reasons is COVID. COVID slowed down the trial. Imagine people have fearful of going to hospital, fearful of seeing doctors, so the trial got slowed down. The new drug sales got slowed down because people don't go to hospital. They try to avoid hospital anymore, and then it's very hard to communicate with the doctor about the benefit of a new drug. So you can see another stock was down 60%. TG Therapeutic, I owned that for a long time. It down 60% with nothing, just slightly sell. So this year, biotech is so down. It's one of the worst years in history for biotech industry. I really worried about some of my friends who run biotech fund would go out of business. I've been worried about their personal safety, worried some may commit suicide or something because it's so bad. Market just this bad. So, but when they're down so much, there's opportunity, right? This Tricida is a very interesting company. It was $40 not long ago, as you said, and now down to $4. What changed? So basically, FDA told them they cannot approve the drugs for accelerated approval, not full approval, accelerated approval. Accelerated approval is the surrogate endpoint. So he said you reach this point, and then if they give them a pass, like Sarepta, I used to own, like Immunomedic, I used to own.
Yep.
So FDA saw that, and I agree with that. They gave early approval. But for them, they actually reduce acid in the kidney. All the doctors think it's a good thing, but FDA say I don't see the clear connection between that versus benefit. That's just FDA just seems just to say that. I mean, if they just say, okay, you come back and then you show me the benefit of that reducing acid, which the company believe they can provide. So when you apply for accelerated approval, usually you do a confirmatory trial, right? Confirmatory trial, are designed very, very long, extremely conservative, make sure it's positive, usually lasts for many, many years, if not a decade. So they have a confirmatory trial in parallel with the accelerated approval, but once FDA reject their accelerated approval, then company can say, okay, I will prove to you using my confirmatory trial, right? So they have this ongoing confirmatory trial supposed to go to the end of 2023. The data in 2024 for biotech. This is a generation. Nobody cares. I say just sell it. I'll see you in 2024, right? So, but if you hear carefully about the recent conference call, things changed. The management, the trial progressed very well despite of COVID. The management seems to be confident they will stop the trial early next year. And then they are very confident they will have a positive data coming out. So think about that. If they have a positive data coming out early next year, or maybe, they stop the trial early next year, the positive data may be mid or late next year. But when you stop the trial, people pay attention, right? So that will be too late to load up because the stock have very limited liquidity. The thing is, they will be the same stage as they were at $40. The company didn't issue any shares from 40 down. Last time they raised the 33 and change, the convertible, right? So that's only that they're trading at cash. People absolutely sold off 90%, but the story is well and alive. So that's what I love it. So easily it may not go to 40 when they stop the trial, go to double digit. It's very easy, right? Then for trader, for investor, I always advise my people is to sell some. If you go to double digit, you can easily sell maybe a third, a quarter, cover your costs, the rest are free. So you don't take the risk when the readout is if the readout is negative, which is always happen, right? Biotech things happen. So that's also remind me another stock we were talking about, Acasti, right? The readout was very negative, but I did tell my subscribers to sell when the stock was like $3. When the stock was more than five-folded, and we sell some, have free shares, go into the readout. Unfortunately, readout was negative, but still you don't lose money. You know what I'm saying, Jay? So,
right.
So that's the same idea. It seems to be a very good opportunity. After I recommended in my newsletter, I found our very famous hedge fund manager called Steve Cohen. He's buying the stock too, so which just gave me some confidence. That this is not, that there are other people looking at this.
Sure. Well, Chen, there's a couple of indications here. First of all, I believe the data, they have had quite a few people in this trial, in this phase 3 trial, and the data has been quite good, as I understand it. That's one thing that, there is some public data, is what I'm saying. And then you mentioned the conference call. But then also something that you found as sort of a tip-off was the fact that the company canceled its loan, its $200 million loan, I believe, right? Or I don't know how much it was. But they canceled a loan. Why would they do that? And I think a lot of people probably said, "Oh, they're giving up. They're going out of business or something."
Exactly. People don't dig in. They don't understand. But it's not in any report, but you have to listen to the last quarter conference call. They cancel a loan because they're going to tell FDA we don't have money to complete the trial, so we need to stop the trial. Why do they want to stop the trial? Because they are confident the data will be positive. But all these are not written somewhere, but you really need to do the work, right? So that's what I like it. It's great. $4 and change,
Yeah, and Chen,
the penny on the dollar.
And Chen, they did talk a little bit about the potential economics of this in terms of the savings, because if they can keep people from going to that stage 5 where they need dialysis or kidney transplant, they can save an awful lot of money because dialysis is very expensive, kidney transplants are very expensive. So if this drug can save people from moving into those later stages, or at least delaying it dramatically, it will save insurance companies a lot of money, in theory.
Oh, absolutely. And then think about dialysis, how inconvenient it's for for patient to do, right, to go through that. It's a terrible experience. So, they said they charge like $3,000 per month is very, very reasonable. But if they do that, and then this is the first approved drug for this chronic kidney disease, and they will be one of the best-selling drugs in the world. You're talking about tens, maybe billions of dollars at least, maybe if not tens. So the upside is enormous, and the company trading at cash.
Yeah, exactly. Well, that's why I wanted to have you come on, Chen, and talk about this. I think it's a very exciting story. And I should tell folks it's chenpicks.com. Go to chenpicks.com to sign up for Chen's letter. He mentioned he's got a couple of more that he's looking at in a somewhat similar situation. They're really stocks, biotechs have gotten taken down very big time this last year or so. Chen is very good at picking value up when it's to be gotten at very low prices. Chen, thank you so much for being with us, and we'll look to do it again sometime soon, hopefully.
Thank you, Jay.